Welcome to another episode of Making Risk Flow. Today, I'm thrilled to be joined by Christian Stobbs, who's the Chief Strategy and Corporate Development Officer and Markel. And I think it's going to be a fantastic conversation. So, Christian, first of all, thank you so much for joining me today.
Well, I'm great to be here. Thanks so much for having me on your podcast.
This is very exciting. So let's start perhaps for those that do not know you. If you can give us a brief overview of your current role, how did you get to your current role? That would be helpful.
Well, I oversee strategy and corporate development for Markel, a role I've been in for just over 6 months. I've actually been with Markel for 11 years. I started with them fresh out of management consultancy in London, and I came into insurance in beginning of 2015 at a time where I was genuinely quite excited about the change that might take place in insurance. I'd observed it from the outside as a consultant and seen elements of its processes and value chain that I thought might have a bit of change over time. And I probably could say I've been disappointed for 10 years, actually, in the sort of small amount of change that's happened in the industry, but rather excited about what's going on now. But just going back to that 2015 moment, I did strategy for a couple of years for our international division based in London. I then went off to run a tax business we'd recently bought, working in a very glamorous place called Rugby, which is birthplace of the sport, but also birthplace of a fantastic business we'd bought just before I joined Markel. I did that for a couple of years, all the fun of working in the Midlands. And then they said, how's about going to Singapore? And I thought Rugby, Singapore, it was a difficult choice to make, as you can imagine, and went out to Singapore beginning of 2019 and really led the build out of our business there. A hugely enjoyable time working across the Asia Pacific region. And then in the middle of last year, they said to me, we're doing a bit of change over in the US. Might you ever able to come and help us out here? So right now, really sort of overlooking what we're doing strategically as a business, not just in the US, but across the globe. And then, from a M&A perspective, what are the opportunities we might inorganically go after? So really enjoying it so far. New to a very exciting and dynamic economy out here, and currently based in New York. And you can sort of see the not very glamorous tall buildings we have here in Midtown Manhattan behind us.
That's really interesting. You were talking about how slow things were perceived at least 10, 12 years ago. And probably I think we're going to have the opposite. You're going to have the opposite feeling now, which is like almost like there's too much change, or things are moving so fast. It's more about where do you focus? I'm sure we will talk about that in a few minutes. But I think one of the aspects of your background, which I think is fascinating, is that move to Asia, right? And it was not just that you moved to Asia; it's like you moved there to really set up a completely new business. In the few years you were there, you grew it by 6 times, tripled headcount. So it was really setting something up from scratch. And I assume you didn't have any background in Asia. So I'm fascinated to hear a bit more. Like, how did you find it moving from Europe to Asia, and how was that experience?
Yes, in many ways, I'm fascinated as to why I was selected to do it, not really knowing much about a very diverse set of economies out there. But it wasn't quite a sort of startup setup. We had been in Asia for about 10 years before that. And we'd done hard yards of planting the flags, opening offices, getting licenses, building the infrastructure. Which is no mean feat. I've seen many businesses go through those first few years of establishing themselves, and it is a tough journey. So we'd done that, but what we hadn't done is really started to scale, and I don't think we had a real clarity around the strategy out there. I'd argue that Markel in Asia, in its sort of first decade or so, was very similar to what many of our London market peers had done. For years, London, and it still is the home of specialty insurance, but for years it also was the sort of dominant player in the Asia specialty markets, and specialty risk out in Asia flowed through to the London wholesale channel. But obviously that started to change as the economies in Asia started to grow, and the talent and capability to underwrite that locally and support those risks locally started to develop. And so a number of London market players, including Markel, opened up out in Singapore, out in Hong Kong, China, other places, and said, look, for us to continue to support businesses out here with our specialty insurance solutions, we need to be on the ground and we need to be serving those customers locally. So we opened up and hired a few people. And we did that across 6 territories. We were in Dubai, in the UAE, we were in India, we were in China, we were in Malaysia, Singapore, and Hong Kong. So we had this great footprint. But beyond sort of saying, oh, what we do in London, we can do in Asia, we hadn't done very much thinking around, okay, how do we do this? What are the capabilities we need locally? What are the adaptations to that risk appetite? And when I arrived in 2019, it was kind of quite an alarming time to be an expat from London arriving, because a number of syndicates were actually leaving Singapore, where I was based. I think at the high watermark of Lloyd's syndicates in Asia, there were about 25, 26 syndicates. After my first year, we were down to 12. Markel was one of the sort of last syndicates standing, as it were. And what do people happen?
Christian, this is still specialty business, so kind of large commercial or specialty business, broker intermediated. It was not direct to consumer, right?
No, all exactly that. And a lot of it was facultative reinsurance, because that's the nature of specialty insurance in Singapore. It flows through to the facultative reinsurance market there. But what happened over that sort of that first decade or so, there were a number of people who started to invest and grow their teams locally. And there were those what I called tourists. And the tourists were there because, oh, hang on, this interesting thing going on in Asia, we ought to have an office there. And in 2018 to 2020, the tourists went home. That left 12 of our syndicates there who were sort of there for the long journey. And what Markel did, and what we sort of identified, is that the need to be local and the need to scale up with local talent. So my sort of view at the time, it wasn't a very particularly sophisticated strategy. It was that let's hire good people who speak the local languages, who understand the local cultures, who understand the local risk nuances. Because, by the way, if you speak the language and you've lived and breathed that country all your life, you're going to have a much better understanding of the risk environment, the risk dynamic of local businesses than somebody sitting on a box in London. So we started to scale up by quite aggressively growing our headcount in areas of the market where we saw profits to be made. And it was initially a lot in the financial lines, professional lines, and then in portions of the marine business, and then growing that out in credit insurance, in the various different forms of energy insurance, and started to get to a critical mass. So being at the sort of helm of that business, having the support of the Markel Group, who the great advantage of Markel in so many things is we think long term. It wasn't about making a quick buck today. It was about doing the right thing for the long term. Because the way an insurance P&L works, as we all know, is you hire people day one. They don't really start to pay for themselves until years 2, year 3. So we were willing to ride that out. If I'm being honest and candid with you, we were hugely helped by the fact it was a hard market as well. So easier time to grow a business. And if there's one thing I'd do differently, it would have been to go a bit faster. But that's with the benefit of hindsight.
Yeah, but so you say so it sounds like one of the big lessons learned there is you cannot just replicate what you're doing in other geographies. You need to adapt to the local market, hire local talent. In what way is the Asian market different in how to do specialty insurance?
Well, I'm going to give you one example, because I asked this very question to a senior partner of BCG, where I once upon a time worked, and we were just opening up in India. And I was out in Mumbai, and I thought, well, it'd be just to see what BCG Mumbai has to say about the strategy of a commercial insurer entering India. And we talked about that for quite a while. I also said to them, what are the common mistakes multinational companies make when they come into India? And he said 2 things. 1, they don't localize management. And 2, they don't localize product. And I said to him, I was very pleased to say, well, we've just hired this wonderful lady called Deepika, who's going to lead our business. And she is native of India. So we've ticked that box of localizing management. But, so can you give me an example of this localizing product? And he told me the story of Mercedes. And in the 1990s, they wanted to go into India. And they went out there with the and they launched in India, and all their adverts, all the sort of marketing they did, they took the playbook they had from Europe, which was, it's about the torque and the brake horsepower, the driving experience. These are fantastic cars to drive. And yet they didn't really get off to a good start. There were very few sales in year one, year two. At the same time, Toyota came in and they wanted to launch a sort of luxury car in India. And they looked at the market and they made one small little adjustment to their car. And that was to put the controls for the air conditioning in the back seat, because they'd done their market research in that local market. And they worked out that anybody that could afford a luxury car had a driver. That is the kind of example where localizing your product is critical to success. And, from an insurance perspective, you've only got to look at the sort of litigation culture that exists in around sort of North Asia, where much lower propensity to litigate means that the cost of, say, a D&O product, the rate online, a London underwriter would see the rate online we charged in Hong Kong and sort of, almost sort of faint at how low it was. Well, that's because of the far, far different, legal environment that exists in Hong Kong and North Asia. So we were very focused early on that, making sure that we don't just hire local people, but we're localizing our product as well.
And so how long did that take? So you were there from 2019 through 2025, correct? Like, how long did it take to get it right? So was it like a smooth ride, or was it like, okay, the first couple of years were more challenging, and then what does the curve look like?
And I've not known many business build outs that have been a smooth ride, and I'm sure you would say the same as well. But it was an exhilarating one, and we had COVID in the middle of that as well. And, my role was looking across all these different territories, which for 18 months, I couldn't go and travel to be with the people, new teams we'd been hiring. So that was hard. And I was very grateful to have a very, very capable sort of management team in those different locations. But with insurance, I'd say the sort of, when did we get there? It's kind of getting to critical mass. So you've got a portfolio where you can own the P&L. And that happened probably at the sort of year 4 mark, where we had built a business. By this point, we're about $200 million of premium or so. And we pivoted the P&L so that we owned, the whole soup to nuts of our financial result. And you can only do that in insurance when you're putting out some pretty big lines and limits. You've got to have a critical mass of income. So that's probably when we started to really feel like we've built something that will scale from there. But some hard yards early on, and particularly given, Markel in Asia at the time was not a known name, and you're attracting people to perhaps start a new office. We opened up in Australia in 2023, and people didn't know Markel. So they were making a big leap of faith to come and join us, and a commitment, a promise from us to build and grow and invest in a business and do the right thing. But once that business, 2 years into it now is absolutely flying under a great leader. Because if you get the right top team, they'll attract more people. Almost talent begets talent, we like to say at Markel. And so it was a bumpy ride as early years. You bring people on, but it's very pleasing to look at what the business is doing now and the success that is continuing, the momentum it has. I tell a lot of my colleagues, my replacement is a massive upgrade. He's a gentleman, Su Chen Chang, and he is just doing a phenomenal job in continuing momentum that we got going over the last few years.
I was actually going to ask exactly that question. Is like, after the experience of being an expat in Asia, setting this up, like, I guess the next question is, who should be your replacement? Should it be some like a similar role, or did you find local talents? That sounds like you went for the local talent, right, to lead the region now.
Yeah, and I was quite keen that they didn't send another me from London as my successor.
They couldn't find anybody else from rugby. I think that's.
I'd love to think we might have had somebody there, but no. I mean, Su Cheng he's American, but he'd spent most of his career working out in Asia, so really understood that market. And it was I was privileged to be part of that process, because for me, having recruited a lot of the team out there to make sure they were, handing those on to the right leadership was very important to me personally.
Okay, so perhaps switching gears to like your current role, and you mentioned one of the reasons you moved back from Asia into the US is there was significant change going on in your US operations. You did, I think it was Q3, Q4 last year, a significant restructure of your P&L management team, kind of organizational structure. I think you declared a really interesting ambition, right? Which is you want Markel to be the preeminent specialty insurance company on the planet. Which I mean, like, which is, I think nobody would argue that should be your vision, and Markel is perfectly placed to become that. But like, what does it mean? Like, how would you measure what does how will you know whether you're coming closer to that goal?
Well, I'm lucky enough to have been brought across here by our CEO, Simon Wilson, whose vision this is to be this preeminent specialty insurer on the planet. And he's already kindly, he's defined what that is to
That's
all
great.
of us. And he talks about four things when we're trying to build that. And we are not there yet in being the preeminent specialty insurer on the planet. We are building it right now. And four things he talks about is one, we must obsess over our customers. Insurance has this incredibly convoluted value chain where sometimes you sit quite far removed from your customer. The best specialty insurer will absolutely think about the person buying the policy and the person we are helping out when things go wrong. Well, I think it's so often we forget the brilliant role insurance plays in society. Our economic role is to help people out when things go wrong. So when you're building the preeminent specialty insurer on the planet, you've got to obsess over those customers and remember that they're the ones who pay you for that promise to help them out when things go wrong. So really having that obsession around the customer is important.
And you would, I guess, you would argue that this is, I mean, you would argue this is important in any industry, but like I think specialty insurance, where you are dealing with like really specific and complex risks, it's even more important, right, than in any other business.
Yeah, I think that is the most important thing a business can think about is their customer. When I was a consultant, you always start a problem, start with the customer. And if you think about the customer and their needs, you'll often make the right decision. But I think you can't commoditize specialty insurance in quite the same way you can do in other P&C classes. And so therefore, by definition, you are having to think about the niches and the specifics of your end customer, perhaps more often than in other products in that insurance ecosystem. But and that actually linked to that is the second point, really, is around the best expertise. So really making sure that in these specialty classes, you've got the best minds thinking about how to underwrite it and thinking about how to handle the claims. You need that technical capability to really be the preeminent player in the market. We're often thinking about who do we look up to at times in a particular class of business. Markel, and you look up to them because they've got the best experts. And we want to be that player that people look to take a lead at certain things and perhaps lead off a new particular risk or a new account. The lead market often has that best expertise. But I'd also say that the lead market also has the best way of judging claims fairly and making sure we make the right decisions, when things do go wrong for our customers, who we are there to support. The third thing that Simon's talked about, which I think is kind of the most exciting right now, is speed being critical. And it's exciting right now just because of what these new technological changes going on across the world right now are allowing us to do. We are able to move quicker, not only in the way we transact our business, but also in the way we develop those solutions. But speed of answer, whether it's to a broker bringing us a submission and they want to quote quickly, or it's a customer needing a claim get paid, we pay it quickly. That's the best kind of answer. And so to be the preeminent player, you have to have speed at the forefront of your service offering. And I think that's, in this sort of the Gen Z culture of the need for instant gratification. This theme is across all industries right now around how quickly can we get back to our customer. So speed's such a big focus for us now, and particularly in the work we're doing, with AI and incorporating that into our business. And the fourth thing Simon talks about is a golden rule we've had at Markel for many, many years, which is doing the right thing. And we're lucky to have a culture that really elevates our Markel style, which is our sort of values statement. But ultimately in business, and in particularly insurance, you need to do the right thing for your clients. I was at an event in Washington on Tuesday, hosted by the chairman of Lloyd's, who was visiting, and he was speaking to various sort of delegates from the US insurance market, and he reminded them of the story in 1906 of that when that tragic San Francisco earthquake took place. American insurers were struggling to pay claims, and a message from London, probably a telegraph message, came out from one underwriter in London called Cuthbert Heath. It simply said, "Pay all valid claims." It's just pay, and that is such a good example of doing the right thing that we hold high up in our sort of the way we operate as a company, and I think over time that doing the right thing really does build you a competitive advantage, and certainly respect from both your customers, your peers, your trading partners, and all those that operate within our ecosystem.
My first reflection, it is really interesting. My first reflection is, how can you, as a former consultant, how can you handle having four things instead of three? Joking aside, I think one reflection on your speed is critical, and I think you were talking about how the kind of the end customer, the end insured, like wants instant gratification, and I always think sometimes we tend to like blame, okay, like customers just want some things quickly, and we sometimes say it in a way which is like, oh, they've got like unreasonable expectations. But I think we should look at it the other way around. It's like, we've been historically slow because of the defect of the value chain, not because it was an unreasonable expectation from the customer, right? When an insured has a claim, the reasonable thing to do is going back with the next step quickly. I mean, that is the least thing you can do as part of the insurance. And we've been slow, and we blame the customers now want everything right away, but that's how it should always have been, right?
Yeah, and I'm going to tell you about one of the most traumatizing videos you can watch on YouTube. Just to sort of illustrate this point, there is a documentary that you can find about Lloyd's of London, filmed in 1961. And it's easier for me to be critical as a Brit on this thing, but we had this series of documentaries back then, filmed by, I think, a company called Pathé, and it was a sort of chest-thumping British Empire documentary about how great this wonderful institution Lloyd's of London is. And you watch this on YouTube, and the traumatizing thing for me is how much of that process they go through when they talk about the broker wandering to the underwriter at the box, and they talk about last night's football, and then they sort of look at the risk and they sort of write a few things down and they stamp it, and then they go off for a glass of sherry at the captain's table. The traumatizing aspect of how much of that I see today, perhaps the difference being they no longer drink sherry at the captain's table, but that whole process and the method of interaction between broker and underwriter is broadly consistent. If you compare that with, say, the London Stock Exchange, in 1961, an open outcry chamber, people sort of very, very sort of shouty interactions, all face to face. And you look at what the London Stock Exchange is in 2026, it's a black box computer. Lloyd's of London in 2026 doesn't look all that different. And I feel that the insurance industry has been moving painfully slowly. And I go back to my earlier comments about almost being disappointed for 10 years at how slow it's moved. And there's plenty of reasons for that, be it the regulation that we have and the duty of care we have to our customers and all that good thing. There's also the fact that people buy insurance just once a year. So the pain of transaction, is less frequent for most of our customers. And there's a third thing, which is if we try and do something new as an insurance company, here's a new product or a new way of underwriting. Typically, it takes us, 12, 24 months to know whether that produces a good underwriting result. So you can't sort of test, measure, learn all that quickly. That all said, what I think we're now seeing and the tools we have access to and the developments we're certainly executing across the business now, the pilots we're running and other transformations, we can move a lot quicker. And so I'm extraordinarily excited, particularly in this role I now have looking at the strategy for the business, about how much quicker we can move to improve the speed of which we can go to market and the speed we can serve our customers.
Yeah, so really that speed is critical. It applies both to responsiveness to brokers and to insurers, but also at the speed at which Markel evolves as a specialty insurer. And I've got to say, so we grabbed dinner a couple of months ago, right, in New York, and I was quite surprised. At the back of that conversation, you had some internal conversations and things accelerated really fast. But I was really impressed by your determination for not just leave with the status quo and hey, just things are slow because they are slow, but really wanting to drive pace internally. And reality is at the back of whatever conversations you had internally, things move fast. So it's almost like it's a daily effort of just not accepting things are slow, but just thinking about how things can move faster, right? And I'm sure is that part of your daily work?
Yeah, I mean, I'm sure I infuriate all the people that have ever worked around me, but I also think I've been very lucky. Certainly, right now, Simon Wilson coming in as our new CEO recently, setting out that vision, setting out speed as a critical factor in our success to be this preeminent insurer on the planet, gives everyone a bit of cover. It certainly gives me a bit of cover as saying, look, guys, we've got to move a bit quicker here. And by the way, if we don't do it, there'll be others out there that will eat our lunch if we're not careful. And I think, certainly my talking with peers, being a sort of student of the market right now, I can see a lot of industry participants now waking up to the need for change in a way that I think a few years ago was just not as high on their agenda. Of course, one dynamic that's important in this is when you're in a hard market, as we were from 2019-20 through to 23-24 or so, the attention and focus of any management team is really around growth and making sure we're making the most of that market opportunities there. In a soft market, there is a greater emphasis on whether it's margin preservation or whether it's business retention. And then the pendulum shifts more towards that, making sure we've got the right operating model, we are servicing our clients right. And so then the focus is increasingly shifting more to making sure we have that operational capability. I was talking with a recruiter in New York the other day, and sadly they weren't trying to get me to do a job, but I'm over that. But they were saying to me that they went back 24 months. They look at their sort of books and the types of people they've been hiring. 24 months ago, it was underwriters. Now the shift is much more around that operational capability. So that's an interesting data point going on in the market right now. I think it's not just Markel that is seeing the need to focus on improving our speed and operating model. Plenty of others are up to that right now as well.
And the other fascinating data point, which is quite obvious, but until you see it on a slide, you don't realize is if you look at the last 4 or 5 years, the growth, to take the commercial insurance industry as a whole, so obviously there are outliers, the growth of the industry was smaller than the growth on the rates, meaning that rates accounted for more than the growth of the industry. To your point, it's like when you get into a soft market, obviously it's actually going to be the opposite, right? So you have to grow by gaining share of the market, but serving more customers. I think that goes back again to your previous point of the way of getting access to more risks, binding more risks is through that responsiveness to your brokers. Ultimately, brokers want to place business with specialty insurers who have the best product and they provide the best service, right? And you cannot trade the one with the other.
Yeah, and there is a structural problem in insurance in that for our customers, for every dollar of premium they are spending on their insurance, they're paying something between 30 and 40 cents in the dollar is going on the cost of transaction. That's 30 to 40 cents that could be giving them a better price if we were slightly more efficient. I use the parallel of the stock exchange. If you buy an ETF out there today, you're paying, 5 to 20 basis points.
Yeah.
Here we're talking about 30 to 40% as a transaction charge. And somebody once provocatively said to me, "What's wrong with a 90% claims ratio? 90% loss ratio, as the industry calls it. That's a really good deal for our customers." But right now, in a falling market, unless you are addressing that cost of business, that transactional cost, ultimately profits will go down, if all things being equal. So that's why there's focus now as prices come off. We have to be addressing that 30 to 40 cents and making sure we're efficient. And the great thing is, go back to the danger of repeating myself here, but the technology that we have out there now, and what you guys are doing at Cytora is a great example of this. Can make things. We can be much more efficient in the way we operate and give much quicker service times to our brokers, to our customers, with the technology we have available now, as opposed to what was available 10 years ago.
So, I was building on that point, and you hinted to the impact of AI and technology also earlier in the conversation, and you're making significant progress within Markel, but also linking it back to the point we made at the beginning of you need focus, right? So at the end, AI and technology now can impact pretty much anything across the business. How do you decide where to focus your effort and your attention?
I mean, it's a very difficult thing because there is so much that can be done. I mean, it's almost a question of where do we start? And I think you have to do things in sort of a few different categories. Ultimately, with something like AI, you've got to upskill firstly upskill the entire organization to use these tools, and so that's providing them, but making sure that they are enabled to use them and deploy it. Because I guarantee there is not a single person working at Markel who won't benefit from some sort of basic AI application. And so we are giving out those tools to all our team to make and encourage them to use. So there's a sort of enterprise-wide enablement as a first thing. The second thing is, finding some pilots you can do as a sort of quick wins. So to prove the model, persuade the doubters that, oh, by the way, AI actually could be quite valuable to you. And you've got some things which you might get some results with 2 or 3 months. And we've got some pilots right now where we're seeing a sort of 50, 60% increase in our quote rate just by using the quote submission rate, just because we are able to get underwriters going through more submissions quicker. I mean, that is a meaningful thing. And by the way, we've got those outcomes in 2 months. So if you find some pilots like that, that can very quickly prove the concept, that's a very, very powerful thing. The third area, which I think is a much harder thing to sort of prioritize, not necessarily prioritize, but to agree on where we do it, is the more transformational sort of bigger bets. Because that, this isn't sort of cheap technology the whole time. You're going to have to spend some meaningful dollars and make sure you get some meaningful returns from it. So that's where we're being much more thoughtful about where do we make more significant investments. And really that's where you sort of traditional business case where you may have proved the concept in a pilot or something, and then you can say, well, look, actually, if we invest more heavily here, the returns are quite meaningful. Great thing is those first 2 things you do help you further identify those sort of more transformational bigger bets.
But I guess that is often easier said than done, because I think as an industry we have a memory of, well, you try something now in Q2, and if it goes well in next year, you go into production, and those timescales they're not valid anymore, because if you are not responding quicker to the faster increasing your bind ratio by 50%, your competitor is today, right? So almost like you need to, I think that's what you meant by that. You need to execute, like make a decision quickly in a month or 2, go live. If we are in May now, go live in July. I think that is the pace, which takes a bit of organizational change management, right? To change the mindset.
Yes, and one thing I would say that with these transformational bets that we are doing differently than we might have done with, say, some technology deployment 5 years ago is this ain't an IT project. This is a business-led project. The decisions are owned by the business. Now, you might need, your IT department to support some of these things, particularly if there's a big technology, shift involved. But this has to be a business-led project. And I read an article recently about this idea that the big change for AI is that it's no longer something the IT department give you. This is something you as a individual working for any business can do some meaningful things with. And it may be a bit of software, but the power is with you as the individual, whether it's an underwriter, claims adjuster, or even indeed a broker. There are some great things that can be done. I also think that with some of these more transformational bets we're doing, we're benefiting from sort of carving people out into a dedicated team, almost sort of startup style pizza box, 5-6 person team, crack on, quit your day jobs within the company and you're going to be on this team absolutely dedicated to it. And that is where we're seeing success, where we approach things differently. We wouldn't have done it that way 5-10 years ago. It would have been the waterfall approach that many IT projects were. We are beginning to think and act differently. The wonderful thing is it's creating a bit of FOMO because people are hearing about these things. I want to be a part of that. And that's exactly the behavior we want to encourage.
And are you seeing a significant change in that mindset and the acceptance of change and the willingness to do things differently? If you compare where was Markel a couple of years ago versus 2026, can you already perceive that?
Yeah, I think certainly in pockets. And one has to remember that there are people always have different attitudes and approaches to change. And the people who are early movers on this will be, they are our champions across the business, but there are people moving very quickly. There is still always going to be a few inert folks out there. But one of the great examples I read about recently that talked about the benefits of what AI can bring. It's a domestic situation where some sort of analysis proves that those people who use ChatGPT or other AI tools to support their sort of personal administrative affairs, their life admin, we call it, those households that are doing that are watching more family films on Netflix.
Oh, wow.
And the causation or correlation, or it is causation, being that because they've sort of delegated more of their life admin to AI, they've got more time with their families to watch more films. And what a cool thing that is. And those are the sort of types of examples where, we want to create in the business here of people who are embracing these tools and succeeding are, whether they're improving the quality of their day job or the quality of their life. That's a really cool thing for us to aspire to enable.
So I'm going to put you on the spot, Christian. What are the use cases of your day-to-day where you're using AI that perhaps 12, 24 months ago you did not expect you would use AI for that? Is there anything that comes to mind?
I don't think there's a single hour where I'm not in Copilot doing something.
Yeah.
And my main use case right now is, I receive a lot of PDFs to read or documents sent to me, and it's sort of not just summarizing for me, but critique this document for me. Critique it. This is my hypothesis on what a motivation or an idea might be. And it's giving me that first level challenge rather than me going back with a first level challenge. It really, I think, improves my response to certain things. That's a very simple thing. And I'd love to bore you about how I made my first agent the other day. But Juan, for a man like you, that'll be a very uninteresting conversation.
No, I was thinking this is a domestic example, but the same way AI creates more family time to watch films. I was chatting with my wife the other day, and then she was saying, "Well, I've been talking to Gemini about what to do in my job," and it's funny because some conversations that her and I would have normally, now she has those conversations with Gemini first, and then we discuss them later. But like it's very interesting how it's becoming almost your right-hand man or woman to help out with from anything from the very small tasks to critiquing your strategy or preparing for a business meeting.
Yeah, and the way I talk about it with our underwriters here is saying, it's the early part of your career. Often, your sort of first natural step is you want to manage people. It's the sort of first sort of step up the ladder, as it were. I'm saying to our junior underwriters, you can manage people. You build yourself an agent; they can be your team, and the savvier ones are absolutely doing that. And then it's just so pleasing to see, and people at all stages of their career, but when they see it and the smile on their face where, oh, crikey, this has just made my job a hell of a lot easier or more efficient or more productive, the satisfaction you can see is quite visceral.
I was reflecting on that because for the last 15 years, we've been talking about the future. What does the future of an underwriter looks like? How will the role evolve? And all the consulting companies would create these archetypes, and then nobody knew exactly how to get there. I see this is just happening in a very natural way, right? It's like many of our clients, underwriters, are becoming more and more peer reviewers. And it's becoming a smoother transition that probably any of us would have anticipated, right? That they're just using AI-generated steering or insights as like a first pass at how to underwrite a risk, and they're becoming more peer reviewers, which leads to higher productivity because they can peer review many more risks in a day, right?
Well, I always think it's important we remind ourselves that AI has not scored 100 out of 100 in its aptitude and its competence. And so the human in the loop is for me still a critical thing. And you're seeing lawsuits left, right, and center right now where documents submitted have been AI written and they've just been flawed in what they've been saying. And so our approach at Markel is very much that the human remains in the loop. It's just how can you automate as much of the sort of repetitive processes to ensure that people are using their time efficiently. So I do think what you get to is a specialty insurer that it's probably leaner. It will have a better expense ratio, and frankly is giving better value for our customers, a faster service. And I go back to this sort of capital to customer. We're bringing capital closer to our customer, and we're doing it in a rather more efficient way. But I think you make an interesting point around this sort of, does an underwriter just become a quality controller? If we do that, we lose the thought, the thinking to get people to that ability to proofread, to quality control, to check, to sense check. And so it's very important that our underwriters, they're developing these tools, they're training them, and they're understanding how those, that they're building almost those processes themselves because they are understanding what it takes to underwrite a risk or to adjust or handle a claim. I don't think success will be that you've just got a bunch of people quality controlling at the end of it. I think we will still have our experts still involved at many points of the journey and making sure we're bringing the best expertise. The other thing, by the way, is risk pools out there are changing, and we've got to make sure we're thinking in a way that I'm not sure AI can yet think credibly about the future. Like, what are the newer risks we've got? What are the newer exposures we need to be spending time doing? And the newer product, how are we going to develop that product? So the importance of humans in this value chain remains very critical. It's just we're going to have much more efficient and productive humans, I'm sure, by the end of this.
So the conversation has naturally evolved to thinking about like how is the industry evolving? What's the role? How is the role of the underwriting evolving? If you had to think like so if you execute on the vision and those 4 pillars that you described earlier, what does the Markel of 2030, 2035 look like? So yeah, I mean, we've touched a little bit on the role of the underwriters, but from what is going to be different, I guess, in 5-10 years time?
I'd hope that people see us as the preeminent specialty insurer on the planet. That would be success. And of course, without repeating myself from earlier, but we do want to have a reputation for being very customer centric, obsessing over our customers, for having great experts, for giving speed of service and doing the right thing. Those 4 things. But I also want us to be a place where people want to come and work, want to come and build their career, and that people enjoy being a part of. We spend most of our waking adult hours working, working at a company. And if we can make that a really enjoyable place to be because we're doing something that's good for society, I think that'd be a very powerful thing if we have that reputation. And for me personally, if Markel can help drive a reappraisal of the value of the insurance industry to society, that will be success, because we too often have a bad press for what we do as an industry. Yet fundamentally, what we're doing is helping people out when things go wrong. I want that perception to be changed. And maybe, Juan, maybe just maybe AI can help us get there.
Christian, I think there's no better way to wrap up this chat that with this description of how to become the preeminent specialty insurance company on the planet. All I can say is thank you so much for having joined me for this episode. I've thoroughly enjoyed the conversation.
Juan, excellent to talk to you, and look forward to catching up again soon.
Cheers.